Good morning, everyone. And on behalf of Axis Capital, I'd like to invite everyone for Dilip Buildcon's first quarter fiscal year 19 earnings conference call. From the management of Dilip Buildcon, we have with us today Mr. Devendra Jain, Executive Director and CEO, Mr. Rohan Suryavanshi, Head of Strategy and Planning, Mr. Karan Suryavanshi, Head of Business Development, and Mr. Raja Ghosh, Interim CFO. I would, before the call proceedings would be that there will be an opening remarks from the management. They would refer to the presentation which has been uploaded on the exchanges, and we would request everyone to refer to that. And post which we'll open the floor for the question and answer session. Over to you, Rohan, for the opening remarks.
Thank you, Mr. Bhavin. First of all, I, along with the whole DBL family, would like to welcome all our investors and our partners to this conference call for the quarter ending 30th June 2018. It's a very special month for us because it's been exactly 2 years since we went public, and we are immensely humbled and grateful to each and every one of you who's shown such confidence in our management and our company. So it is my great pleasure and honor to be able to host this call and update all our partners of the important milestones that we've achieved this quarter and what are our expectations for this coming year to set the ball rolling. So let me first share the key highlights for this quarter. We won projects worth 2,744 crores. Now this is the EPC value including GST. We also completed the Guna-Byaura toll project. This was completed 261 days before scheduled completion date, and it is entitled for early completion. This project is in the state of Madhya Pradesh. We also completed Sargaon-Bilaspur EPC project, which is in the state of Chhattisgarh. This was completed almost 3 months prior to scheduled completion date. We are also very proud and happy to announce that we completed our first dam project as well, which was again completed before time and was inaugurated by the Honorable Prime Minister Shri Narendra Modi on the 23rd of June. Besides this, we also completed financial closure for 3 HAM projects. And last but not the least, we are also very proud to share with all of you guys that the SAP exercise that we had started a year ago with IBM is live now, and we are very proud to be, have implemented across all our sites. Now let me outline the agenda of the company for the current year. Our focus will be on execution of projects in hand, a strength for which the company is known for. Our current order book is very robust, providing us very clear visibility for the next almost 3 years. We see a very healthy growth in revenues this year of around 25% plus. Usually, the revenue in the first half of the financial year versus second half of the financial year, the ratio is 40-60. We are also confident of maintaining similar EBITDA margin profile as we have in the past of around 17 to 18%. Our focus, as has been in the past few years, will be again on winning early completion bonuses, and we expect to be in the range of 1 to 2% of our revenue. While we all continue to execute our projects with such pace, we will also selectively participate in new bids, and we are targeting to win around 10,000 crores of new orders in this financial year. These orders will be spread across roads, highways and bridges, railways and metros, irrigation, urban development and mining. We are gearing up to tap emerging opportunities in the whole infrastructure space as we are a full service infrastructure company now. We've also invested about 37 crores in new equipment in the first quarter, and for the rest of the year we are targeting a capex of about 360 crores, taking the total for the year of around 400 crores as we have guided in the past. Now this is for our regular business and excludes the capex that we might do for the MDO project that we've recently won. Another key area of focus this year is to strengthen our balance sheet further and to improve our working capital days. Now, this has been a very crucial effort of the management in the last few years. And as you have seen, the improvements are for everyone to see, and they have been massive. We are constantly focusing on debt reduction, and we plan to reduce our overall debt this year as well and bring down the debt-equity ratio below 1. If you look in the last 4 years, our gross debt has increased nominally, where our revenues have more than tripled in the same time frame. And the same time frame, our working capital cycle has also halved. Another very interesting statistic is that in the last 4 years, our asset utilization has doubled, and it will continue to improve further. Now, this has continued to happen due to superior execution, operational excellence, and also the fact that we were investing heavily in the starting of the years, which has now it's now tapering off. While we are planning for debt reduction, we are also planning to diversify our sources of debt via NCD and CP. The rationale is to reduce our cost of debt and to avoid reliance on any single source of capital. This is also in line with the recent SEBI proposal for large corporates to raise 25% of the borrowing from the corporate bond market. Last year, we had successfully raised 600 crores at 8.9%. Now, while we do not require any external funding for our growth plans, as per statutory requirement, we will have to reduce promoter holdings by August 2019. And we are internally contemplating the mode to do it. But there are no immediate plans. As we have demonstrated in the past, we will also look to monetize our HAM assets as soon as we can and move these assets out of DBL balance sheet to make DBL a more EPC-focused company with a clean balance sheet. Finally, we have always focused on improving our credit rating, and we will continue to have the same focus even in this financial year. We were, in the last quarter, given AA- rating. So we are hopeful that we will continue this trend that we have in the last few years, which will further help in reducing our cost of capital. So these are our agenda items for this year. Now let me come to the company updates. Our net order book as of 30th June stands at 24,090 crores. 93% of this order book is constituted by roads, highways and bridges projects. Irrigation projects contribute 0.03%. Urban development projects contribute 0.54%. And mining contributes 6.55%. 93% of our order book is from the central government. And the 7% is from the state government of Maharashtra, where we won one of the packages in the recent Bombay-Nagpur highway, Samruddhi corridor. We do not have any other state government orders besides this one. We are also the largest owner of construction equipment with 10,346 vehicles right now compared to 8,718 construction equipment during the same period last year. We are also the largest employer in the road construction industry with an employee base of 34,114 employees as compared to 27,373 employees during the same period last year. Post the first quarter of this financial year, we've also won 2 mining projects. Number 1 is an overburden removal project. It is in Singrauli in the state of Madhya Pradesh, and it is valued at about 718 crores. Besides this, we've also won a historic and monumental contract for DBL, which is an MDO, our first MDO contract. This is the Pachwara Central Coal Block in the state of Jharkhand. This is for the state government of Punjab, and it is valued at 32,156 crores today, excluding taxes and without adjusting for inflation. Now, this order was won by a consortium of Dilip Buildcon Ltd and VPR Mining. We will be mining about 7 million metric ton of coal per year at the peak capacity, and the rate that we won is as 840 rupees per ton. This will roughly generate about 600 crores of revenue per year excluding GST and without adjusting for inflation. The profits will be similar to the range of our road projects. Now, the best thing about this project is that it gives us revenue visibility for the next 55 years. And for a company like us, which has a model of owning its equipment and having all its manpower on its roll, this is the best because we do not have to worry about finding new business opportunity every 2 years as it is in the case of a road project. Usually, MDOs take 3-4 years to generate revenue, but since this was a running mine which was cancelled by the Supreme Court, we will start generating revenues in this mine from the next financial year. Also, the funding that we will provide in this project will be about 200 crores over the next 2.5 years or so, 2 to 2.5 years. I'm also very happy to report that our mining revenues have grown healthy at a healthy CAGR of 48% since June 2016 when we entered the segment. And we have only consistently grown this segment. Now coming to our asset sale to the Shrem Group, as per our agreement, there was no payment scheduled in the Qtr1 on FY19, but the full year guidance is on track, and we are very, very confident of receiving the money as the scheduled payments come. Now, coming to the financial closure of our 9 HAM projects, as we had indicated in the past, the financial closure dates are between September to November, and we are on track to achieve the financial closures as per our internal target. At the various financial institutions, the process is on at various levels, and we are confident of achieving it on time. And we will inform the market as and when they happen. We're also very happy to announce that we've recommended a dividend of ₹1, which is at 10% per equity share on a face value of ₹10 for the financial year ended 31st March 2018. The thought process behind recommending dividend was that we wanted our shareholders to also participate in the incredible growth story of Dilip Buildcon. Now let me quickly touch on industry updates before I hand over to our interim CFO, Mr. Raja Ghosh. Now in FY18, National Highway construction hit a record of 26.93 kilometers per day, registering a growth of 20% over the last financial year when it was 22.5 kilometers per day. Then the last 5 years, the average length of projects awarded by NHAI was 2860 kilometers compared to 7400 kilometers in FY17-18. Now this is a record accomplishment by the National Highway Authority of India since its inception in 1995. Now the Government of India has said that it plans to increase the length of national highways from the current 1,22,432 kilometers to about 2 lakh kilometers. And they have also announced the Bharatmala Pariyojana. In FY17-18, almost 10,000 kilometers of national highways were constructed as opposed to 8,000 kilometers of national highways in FY17. Now, road project awards in India have seen a shift from being purely EPC to a mix between EPC and HAM. We foresee the same the ratio to be maintained even this financial year. What's very interesting is the project lines awarded under hybrid annuity has increased from 345 kilometers to 3,300 kilometers plus in the last 2 years. Now the question on everybody's mind is, with Lok Sabha elections, how will the awarding happen? We are very confident of the road ministry touching close to its target of 20,000 kilometers that they have indicated, which will be high from the 17,000 kilometers of awarding that they have done in FY18. The order inflow should happen in the third and the fourth quarter mainly, as was the case in the last financial year as well. The pace will increase, and we don't foresee any problems in place because all the projects are already at the awarding stage and they're just awaiting land acquisition clearances. So once the full order inflow happens for Dilip Buildcon as well, again it will give a order visibility for the next 3 years from then. Now I request Mr. Raja Ghosh, our interim CFO, to present results for the quarter of June ended 2018.
Thank you, Rohanji. Good morning, everybody. I believe you must have had an opportunity to see our results in the presentation that has been circulated and uploaded in the exchange. I would now present the result for the quarter ended 30 June 2018. The total revenue on the standalone basis is 2,445 crores in Q1 FY19 as against 1,667 crores in Q1 FY18, which indicates a growth of 47%. The operating expenses also increased in the same line. It's increased by 47% to 2,004 crores as against 1,364 crores in the corresponding period of the previous year, which is in line with the revenue growth. Our standalone EBITDA margin for Q1 FY19 has been at 442 crores as against rupees 303 crores in Q1 FY18. That is a growth of 46%. Our EBITDA margin for Q1 FY19 is at 18.07%. The standalone profit before tax stood at 245 crores in Q1 FY19 as compared to 127 CR in Q1 FY18. There is a growth of 93%. And the standalone PAT for Q1 FY19 is at 256 crores as compared to rupees 122 crores in Q1 FY18, a growth of 109%. Our PAT margin for Q1 FY19 improved by 300 basis points to 10.45%. Basic earnings per share for the quarter ended 30 June 2018 was rupees 18.64 as against 8.97 in the corresponding period for the previous year. And moving to the segmental result, Q1 FY19 revenue for the roads and bridge segment increased by 57% on year-on-year basis to rupees 2196 crores as compared to rupees 1402 crores in the corresponding period of the previous year. Irrigation segment recorded a revenue of 35 crores during the quarter ended 30 June 2018, registering a year-on-year decrease of 51% because of the depleting order book. Q1 FY19 revenue from urban development segment increased by 936% year-on-year basis to rupees 11.4 crores as compared to a mere 1.10 crores in the corresponding period of the previous year. Mining segment recorded a revenue of 203 crores during the quarter ended 30 June 2018, registering a year-on-year increase of 5%. Our finance cost has reduced from 6.64% to 4.95% in proportion to the top line. This improvement we will continue as has been the trend for the last few years. As on 30 June 2018, the gross debt on standalone basis is 3,290 crores. The increase in gross debt from March quarter to June quarter is in line with the trend for past years. Our gross debt to equity as on 30 June 2018 stands at a healthy position of 1.21 as compared to 2.51 during 31st March 2015. The gross debt to equity ratio is on downward trend with the increase in revenue, and it will continue to improve further. As a constant endeavor to reduce and improve our working capital days, I am happy to share that our net working capital days has reduced from 119 days in Q1 FY18 to 85 days in Q1 FY19. Other current assets and other current liabilities have been regrouped this time. Reason being GST improved credit has been netted off with GST liability. Further, the trade receivables and other financial assets have been regrouped. Reason being unbilled revenue has been regrouped under the other financial assets, whereas earlier it was grouped under trade receivables. This regrouping has been done as suggestions given by our auditors. And with this, we now open the floor for question and answers.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. Congrats on a very good set of numbers. Hello.
Yeah, please.
Thank you, sir. Thank you.
Sir, I wanted to know what is, excluding this 9 HAM projects, what is the EPC value?
What is the EPC value excluding 9 HAM projects, sir? Not sure. I understand.
So I'm saying in the current order book of 24,000 crores, what will be the 9 HAM projects EPC project value?
So there are 12 HAM projects that we have. The EPC value of those 12 HAM projects without GST is about 11,000 crores plus.
Okay. And what could be...
This is for the 12 HAM projects.
Yeah, okay. And what could be the, in your guidance, how much you would have factored in from execution from these 12 projects?
The execution for these projects will start only in quarter 3 and quarter 4. So this is only a small number in our guidance. Our existing order book from earlier as well will provide for it. The detailed breakdown we can discuss later if at all you are.
So balance 13,000 crores gives us sufficient visibility to cover up 10,000 crores of revenue this year. This is what I basically...
Absolutely.
Okay. And so what will be the mobilization stage of these 12 projects, I mean, with regards to like setting up camps and all, and secondly, with regards to land status, I mean, if you can just highlight that out of these 12 projects, how many would have 80% or more than 80% land, and how would be like lower than 80%?
परीक्षित के सभी 12 प्रोजेक्टों का जितना भी लैंड एक्विजिशन है वो काफी एडवांस स्टेज में है, क्योंकि अभी काफी प्रेशर है मिनिस्ट्री से इन लोगों के ऊपर, तो अभी काफी फास्ट हो रहा है. और जो इनका ऑलमोस्ट टाइमलाइन जो फॉल होता है अपॉइंटेड डेट का, द स्टार्ट फ्रॉम द अक्टूबर टू नवंबर एंड दिसंबर, उसमें ऑलमोस्ट 80% लैंड सबका हो जाएगा. थोड़ा बहुत दिन अगर डिले होगा तो लगभग मैं जो डिले देख रहा हूँ 30 to 40 डेज का डिले ऑलमोस्ट देख रहा हूँ सारे प्रोजेक्टों में. लेकिन जनवरी तक मैक्सिमम सारे के सारे प्रोजेक्ट हमारे जो रिलेटेड 12 प्रोजेक्ट हैं वो अपॉइंटेड डेट आ जाएगा उनका. 80% लैंड भी उनमें हो जाएगा. काफी अच्छी प्रोग्रेस है. कुछ प्रोजेक्ट्स में तो ऑलरेडी 90% से ज्यादा लैंड अभी आज की तारीख में मिल चुका है, लेकिन अभी हमारा 150 डेज होना बाकी है कंडीशन प्रेसिडेंस का. तो दैट्स व्हाई हम लोग वेट कर रहे हैं बारिश खत्म होने का और अपॉइंटेड डेट लेने का. और जहां तक हमारा मोबिलाइजेशन एज यूजुअल जो हमारी स्ट्रेंथ है, सारे हमारे 12 प्रोजेक्टों में हमारी कैंपिंग चालू हो चुकी है. सभी जगह हमारे क्रशर्स पहुंचना चालू हो गए. कुछ जगह तो हमारा एग्रीगेट क्रशिंग भी चालू हो गया है और हमारे सर्वे टीम, डिजाइनिंग सभी इन लाइन है. तो जो हमेशा से हमारी जो प्रिपरेटरी वर्क अच्छा स्ट्रांग होता है वो इस बार भी सब जगह तैयार हो रहा है पूरा.
सर, एक आपका हर एक जो प्रोजेक्ट है हैम का इज एज बिग एज लाइक ऑर्डर बुक ऑफ सम ऑफ द स्मॉल कंपनीज, मतलब 1000 या 1200 करोड़ के ये सब प्रोजेक्ट हैं. तो इसमें आप लाइक प्रोजेक्ट मैनेजर, ईच विल हैव इट्स ओन प्रोजेक्ट मैनेजर्स, राइट? एंड हाउ आर यू एबल टू अट्रैक्ट पीपल फॉर दीज?
इवन परीक्षित जी, हम प्रोजेक्ट में आप अभी भी जितने भी हमारे प्रोजेक्ट देखेंगे तो हम लोगों ने एक 50 किलोमीटर के प्रोजेक्ट को भी 2 सेक्शन में बांटा हुआ है. तो इवन 50 किलोमीटर में भी हम 2 प्रोजेक्ट हेड रखते हैं. लखनऊ सुल्तानपुर जो हमारा 127 किलोमीटर का पैकेज है, वहां पे अराउंड 40, आपने विजिट भी किया है वो पैकेज, 40 किलोमीटर के हमारे 3 सेक्शन होते हैं और उन तीनों में एक इंडिविजुअल प्रोजेक्ट हेड होता है. और हमारी जो HR पॉलिसीज हैं इतनी स्ट्रांग है, तो और कंपनी कितनी अच्छी कारपोरेट गवर्नेंस देती है, इतनी अच्छी फ्रीडम देती है लोगों को काम करने की, तो लोग अट्रैक्ट होते हैं और अच्छी मैन पावर हमें मिल रही है अभी सब जगह से.
Thank you, Mr. Kanpal. May I request you to join the question queue for any follow-ups, as we have several participants waiting for their turn. Thank you. Before we move to the next question, we would also like to remind the participant to limit their question to 2 per participant. If time permits, he may join back to the question queue for any follow-ups. We have the next question from the line of Shravan Shah from Daulat Capital. Please go ahead.
Yeah, first of all, congratulations to the entire DBL team for good set of numbers. And just a humble request, sir, keep on concentrating on your core business and keep on performing. Rest other things will definitely fall in place. My first question, sir, firstly, definitely on the revenue, no need to ask, but still asking, in the sense that don't we think that we can even do 11,000 crore kind of revenue this year?
Sir, our guidance is what we have given. Whatever happens over it, we'll let that be something as of a surprise for our investors.
Okay. And sir, one request in the sense that in terms of the MAT credit number for the quarter, if you can keep on giving the same in the result press release itself, then it would be great, because normally we want to see as what is the core recurring PAT which the company can generate. So that's what it's a humble request if you can include in the coming quarters and the press release.
We will do that. The MAT credit as of June 18 is 411 crores, which was about 413 crores as of March 18. So we will do that. We will take that consideration. Okay,
thank you. And sir, justly last on the thing that in terms of the debt, this quarter definitely has increased, but our interest cost has actually reduced just by 5 CR. If I just consider the fourth quarter, it was 126 crore, now it is 121. So why is it so? And when would our CP will come in, when we'll have a CP, we want to raise the money and how much, and overall by end of the year, how much debt level we are looking at?
Sir, the increase in debt in this quarter from March to June is the same that has happened in the last 3 financial years as well. If you look at it, the trend is in line as we invest in our sites and all. In terms of interest costs and all, the interest costs also includes, our BG costs and all the other costs, not just so. So it is a function of all those things put together. And reduction is always a better thing, right, whatever is happening. As per CP and NCD, we will look at whenever we find attractive rates, and we will go ahead with that. The idea, like I mentioned earlier as well, is not to just diversify our sources of debt, but also reduce the cost of debt. So that is the idea.
Okay. Sir, lastly, if I will be allowed, you initially mentioned that you would be looking at reducing the promoter stake by August 19. If you can elaborate on that.
Sir, that is by law that we have to do it. So even though while we might not want to dilute, but it's by law we have to reduce to 75%. It's hardly a very little percent that we might have to do.
So it is about only 0.6%, not...
Yes.
Okay. That's it, and all the best.
Thank you, sir.
Thank you. The next question is from the line of Nilesh Bhaiya from Macquarie. Please go ahead.
Yeah, hi, this is Inder here from Macquarie. Hi, Rohan. Hi, Mr. Devendra. Thanks for the opportunity. A couple of questions from my side. The first is, you mentioned about 10,000 crore order inflow this year. Is there a rough breakup in terms of how much you expect that to be out of roads and what would be non-road portion? And do you think that the non-road portion would need a substantial amount of CAPEX, maybe not in FY19, but going forward as you start to kind of develop competencies in those areas?
Already हम लोगों ने करीब 3,000 करोड़ के प्रोजेक्ट जो जीते हैं, उसमें लगभग 1,500 करोड़ के प्रोजेक्ट जो हैं वो फ्रॉम द कोल माइनिंग साइड है. वो लगभग 1,500 करोड़ के प्रोजेक्ट ऑलमोस्ट रोड प्रोजेक्ट्स हैं. और इन फ्यूचर लगभग हम ऑलमोस्ट जो बिल्ड कर रहे हैं उसमें 80% हमारा शेयरिंग जो आएगा वो रोड से आएगा. 20% अदर सेक्टर लाइक अगेन माइनिंग, मेट्रो और इस तरह के जीतेंगे. जो अभी इस बार हम लोग जो इक्विपमेंट खरीदने के लिए जो हम लोग ग्रास ब्लॉक खरीदने वाले हैं, वो हमारे लिए इस बार के लिए इवन अगले साल के पहले 2 क्वार्टर के लिए वो पूरा सफिशिएंट होगा और उसमें कोई मेजर इक्विपमेंट हमें एड ऑन नहीं करना होगा अगले साल के लिए.
Okay. Thank you. Second question is regarding this financial closure. the project that we have where we need close to 1,300 crores. So the presentation mentioned that 3 projects have achieved financial closure. On these 3 projects, what is or when are we likely to get the appointed date? And the remaining 9 projects, where exactly are we in terms of the financial closure progress?
Sir, appointed dates for the 3 projects that we've achieved, these are all in Q3. We should get appointed dates. And from our side, the condition precedents have been met. It is only the government side with the condition precedents have to be met. As they are done, we will get the appointed date for those projects.
Got it. Thank you.
Thank you. We have the next question from the line of Sriharsh Singh from Bank of America Merrill Lynch. Please go ahead.
Hi, this is Amish here. Devendraji, Rohan, thanks for the opportunity. In the opening remarks, you mentioned about 3 things. I would appreciate if you could give some color on these 3. One is the benefits of the SAP system that has now been rolled out. The second, maybe I know it is too early, but 3 years out as a strategy, what is the mix of roads versus non-roads that you are looking in your order flows or order book, as an ideal mix? And working capital reduction has been happening sustainably, but what should we assume as a sustainable level, once you've achieved? And if you can give some color on how are you planning to reduce working capital cycle further, those would be useful. Thank you.
Thank you very much, sir, for all your questions. Now, number 1, let me start with the SAP. What the SAP has done, it has brought all our functions under one umbrella. The reason why Dilip Buildcon had grown where it has come to was because we have very high reliance on systems and processes. Now, the system that we were running earlier was based on Oracle, and they were individual systems. The bidding team was doing their own work, execution team was doing their own work, quality team, all of them had individual systems based on which we had grown. Now, as we were growing, we also realized that all the systems need to speak internally to each other better, which was not happening automatically. Even though the data was being shared, it should have been happening automatically at the click of the button, which wasn't the case, which is why we brought in SAP. Now, with this SAP, we foresee further improvement happening, in our overall operational excellence. Tracking would become much better, and how we improve the systems, because we spent over a year sitting with IBM, and we had almost 20-25 people from their team sitting in Bhopal, developing all these different processes. We're doing interesting things on using AI as well. So we are doing a lot of analysis. So the analysis depth, it will be improving furthermore. The system's robustness has become better. All of this is on HANA. So we are excited about the possibilities that it will bring, like whenever such a system comes to play. Secondly, you asked about the road business 3 years down the line versus, the other businesses. If the government bidding continues in the way that it does and what we have indicated, which we are very confident of, we still feel maybe in 3 years from now, road will still continue to be a dominant part of our revenue generation, which will be about 70% or so in that range. And the rest, other will be about 30% or so. That should be about how we think about business even 3 years from down the line. And what was your third question, sir? Sorry?
Working capital reduction, what are you doing specifically, and what is the sustainable level?
Bunch of things that we've done. We're working mostly with the national government. So, we have reduced our data cycle from where it used to be. So we have actually one of the best data cycle in the industry right now. We are working on reducing our inventory cycle even furthermore. So that will again bring down data, the overall thing. So these 2 things primarily, which will be driving these things. Also, some of the old stock receivables which have gotten done with, or, we have removed them. All those things put together is what is improving. So this should, our ideal target is, even bringing the working capital cycle below 60 days. So let's see when we get there.
So this does not account for any improvement related to those 2 stuck receivables, and despite that you were talking about an improvement. Has there been any progress on those stuck receivables?
Overall, everything put together.
Thank you, Mr. Singh. I request you to join back for the question queue for any follow-up. Thank you. We have the next question from the line of Prem Khurana from Anand Rathi. Please go ahead.
Yeah, good morning, sir. Thanks for taking my question. basically, I want to understand if you could help me reconcile the cash flows for the quarter, because I mean the debt has gone up, and this is despite we having seen some improvement in our cash conversion cycle, as well as when I look at our P&L, we seem to have done almost around 330 odd crore rupees of cash back. So even if I do adjust the 330 crore rupees of cash back or 37 crore rupees of capex that you've done, we would have generated almost 300 odd crore rupees of net cash back in this quarter, and despite that the debt has gone up, so which essentially means we have incrementally committed or spent almost 600 odd crore rupees in the business. So where would have this money kind of been spent for or have gone in the business?
A bunch of numbers that you threw at me, sir. So
sure, no problem. So let me make it very easy.
I'll put it offline with my team, and they will explain to you how the cash flow statement. Or if you want to, we will explain to you offline easily.
Sure, no problem. Just if you could help me understand if we invested any money in these hybrid annuities which were under construction during the quarter, and how much would that amount be?
So when we invest in our assets, all this ground preparation, all these assets that we are building, hybrid annuity projects, we haven't received any mobilization advance for them, which will come only in quarter 3 and quarter 4, which will be about 1,500 crores or so. But in the meantime, when Devan Bhaiya also mentioned earlier, we've invested in setting up camps, we've invested in setting up, starting crushing. Besides the HAM projects, there are also the EPC projects that we started, preparing. Now, revenue from none of these projects have started coming. So all the projects that we won in the last quarter, all these projects, none of the projects have had revenue come in. But we have started investing on all these projects. And even if you look at all these projects, there are about 20 projects. Even if you imagine 20-30 crores of investment in each project, that takes to 500-600 crores.
Sure. Okay.
On all these projects. But my team will explain to you in detail how the investments and everything has gone later on.
Sure, no problem. And second was, on this MDO that we've done during the quarter, so basically, how is the IRR different from our road projects? And given the fact that we've always shown our intent to kind of get done with our asset ownership business, as in, whenever other projects are complete, so would that hold true for this as well? Once you were to stabilize, you would look to have a partner in this as well?
Sorry, I'm not sure I follow your question.
On hybrid annuities, on MDO, what kind of IRRs are we looking at, and how are these different from the road projects that we have, hybrid annuities?
We have said that the IRRs that we're targeting from these projects is similar or better than the road project, and that's how you should think about it.
Sure. And how does it reconcile with our thought process that we don't intend to have asset ownership businesses? We've already monetized our 24-watt project.
This is not an asset ownership, number one. This is a purely EPC contract for the government for the next 55 years. So let me firstly address that. It's not an asset ownership. It is just an EPC contract for the next 50 years where we supply coal to government on a fixed pre-decided rate. Even for this, because even though we have to file, make a separate SPV and all of that, we are still thinking if we need to make further changes in how we financially model it, but this should not be seen as completely as an asset ownership.
Thank you, Mr.
Well, I don't own the underlying asset here.
Mr. Khurana, may I request you to join back to the question queue as we have several participants waiting for their turn. Thank you. We have the next question from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Sure. So thanks for the opportunity. I wanted to focus a bit more on the working capital side. Now, if I were to be focusing on this unbilled revenues which are booked in this in your balance sheet separately now, and there seems to be a big increase happening on that side. So could you please explain to us what is the nature of these unbilled revenues and should they be normalizing over time?
इसका मैं आपको डिटेल में समझाता हूँ कि अभी हमारे जितने भी प्रोजेक्ट ईपीसी के होते हैं इसमें एक पेमेंट्स के लिए एक शेड्यूल एच होता है जिसमें सर्टेन माइलस्टोन्स दिए हुए हैं कि आपको हाईवे में 10% वर्क करना है, उसके बाद पैसा रिलीज होगा, 10% ऑन सबग्रेड, 10% ऑन द जीएसबी लेवल, 10% ऑन द कॉन्क्रीट लेवल. तो अगर आप पर्टिकुलर किसी मंथ में अगर आपका 9% काम भी होता है तो वो उसका बिलिंग इंटाइटल नहीं होता एम्प्लॉयर के द्वारा. तो लेकिन हमने उतना 9% काम तो किया है, तो दिस इज द अनबिल्ड रेवेन्यू जो हमारे सारे ईपीसी के प्रोजेक्टों में होता है.
Okay, got that. Okay. Second question was on the Shrem Group transaction. Now, you've given a very nice exhibit talking about how the under construction projects are progressing so well before time. They are 15 to 60% complete already. Now, there is about 400 crores of money that needs to flow in from the Shrem Group. Now, could you give us some sense of what are the milestones to be achieved after which this money starts coming in? Or is it once 100% progress is done, only then the money starts coming in?
No, sir, उसके milestone लगे हुए हैं, वो completion से tied up है, उनकी equity का flow is also tied to the milestones for the projects. So as we hit those milestones, that money also keep flowing in for both to DBL and to the SPVs directly. So it's all milestone linked.
Okay, so it will eventually come once all the progress has been 100% complete.
Yeah. As the project's final money will come and all the projects are completed. Right. Sure. But as the final chunk, otherwise it's all milestone linked.
Sure. Just a last question from my side. Now, you started by saying that NHAI from an ordering perspective should broadly grow from last year. Still our guidance for order inflows, and just want to clarify, this is 10,000 crores for the entire year, not remaining 9 months, is obviously a smaller number versus what you achieved last year. So just wanted to get some sense as to why we are guiding for that kind of number.
So we always guide for a lower number. Whatever we might do is separate, but our number is guidance is going to be there only. Number one, we don't disclose how much as a company we want to do because this is all public information. But what we are giving is a good enough guidance to as a starting block.
Sure. I'll get back into queue for more questions. Thank you.
Sure.
Thank you. The next question is on the line of Alok Devra from IIFL. Please go ahead.
Hi, good morning, sir. Congratulations on a great set of numbers. So just a couple of questions. What is the bonus amount if we have received any in this quarter?
No bonus in this quarter, sir.
Okay. But for the full year, we are maintaining around 100 crore, is it?
Yes. Yes, sir.
Okay. And one more thing on the land acquisition part, which you mentioned that in some of the projects, so you are witnessing delays of, it could be a delay of 30 to 40 days. So this actually we have been witnessing in some of the other companies as well. So, I mean, 2 quarters back, this wasn't really the situation. So have things changed or what is the status now on that?
So the status for all projects is as we had always assumed it to be. And even when we end up winning projects, we also assume when do we want to deploy our equipment, how much, when will we move the major equipment, when will we start moving our manpower there and all that. And based on which we keep our calculations. So if we ever feel that we need to increase or reduce that pace, we work accordingly with the government. So this is all in line as we had imagined earlier as well. And as has been the case for all the HAM projects for the past cycle as well that we won.
Okay, so we are not not expecting any significant delay anywhere.
No, not as of now.
Right. Just one last question. This MDO project which we have won, so how does the revenue accrue? I mean, from when we'll see the contribution from this?
From next financial year, we will see contribution coming in. From September, post-September is when you see revenue from that project coming in. So from 1 year from now, it take to start the mine, and then is when we will see the revenue coming in. So third and fourth quarter is probably when you will see revenue coming in.
Right.
Of next financial year.
Yeah, and the numbers would be, I mean, if it is the multi-year contract, so the revenues would be like more of back-ended, is it? It would start with a low...
No, sir, it's a 600 crore per year contract, as you mentioned, without adjusting for inflation at current prices.
Okay. So we can expect nearly 300 crore coming in next year.
That is what you can expect, even though it's the first year, but, if you do the math, that's somewhere like it should flow.
Okay. That's all from my side. Thank you.
Thank you very much, sir.
Thank you. The next question is on the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, just one question, sir. So some sense on your effective tax rate for next 2 years? Given, I think you have got 400 odd crores of, the MAT credit, right?
course, sir. So the accounting tax rate for FY19 will be approximately in the range of 25 to 30%. As projects eligible for ATI deduction is reducing. And also, and even for 20, it should be approximately in that same range.
So 25 to 30% would be the effective tax rate is what?
The accounting tax rate.
Okay.
The actual cash flow outgo will be lower. Because of the VAT credit, the actual cash flow will be lower, but the accounting tax rate will be in that range.
Okay. Then in terms of your actual cash outflow, it would be in the range of what, 18-20%?
It will be about 21% plus or somewhere in that range. This year it is MAT. Next year also it will be somewhere a little above that.
Okay. So on a quarterly basis, when will it start reflecting basically? Because I think this quarter also we did not have much tax to pay, right?
So quarterly, I think from quarter 3 it should reflect. But we are giving you, instead of looking at it quarterly, just look at it on an annual basis.
Sure. Okay. That's it from my side. Thank you very much. All the way best.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Subramaniam Yadav from Shubham Ventures. Please go ahead.
Sir, just wanted to understand on the capex for this MDO. You have already in the call said that would be doing around 200 odd crores. So would this be coming in FY20 again initially, or would it be spread across maybe 2 years kind of a thing?
Sir, it will be about, this will be, part of it will be in this financial year, part of it will be in the next financial year and a little post that.
Okay. So this year 400 crore includes some of MDO's capex, right?
No. This 400 crore is only for the road equipment.
Road equipment, okay.
और MDO के लिए जो भी इन्वेस्टमेंट होगा वो नेक्स्ट फाइनेंशियल ईयर में होगा लगभग 100 करोड़ का इन्वेस्टमेंट हम MDO के इक्विपमेंट में करेंगे नेक्स्ट ईयर में.
ओके. तो नेक्स्ट ईयर का टोटल कितना होगा सर कैपेक्स?
कैपेक्स अकेले रोड के लिए वी आर टारगेटिंग अराउंड 200 to 250 करोड़ इज सफिशिएंट फॉर रोड एंड अराउंड 100 CR फॉर प्रेजेंटली दिस MDO. अगर माइनिंग का बिजनेस कुछ और एड ऑन होता है इन कमिंग फाइनेंशियल ईयर और रेस्ट ऑफ द फाइनेंशियल ईयर तो दैट नंबर्स कुछ चेंज हो जाएंगे थोड़े से.
ओके. तो मोटा मोटी 350 करोड़ से 400 करोड़ हो सकता है मतलब नेक्स्ट ईयर कैपेक्स. ओके, ग्रेट सर. थैंक यू सर.
Thank you. We have the next question from the line of Vijay Kumar from Spark Capital. Please go ahead.
Good morning, sir. Thanks for the opportunity. Question on the MDO front. So if I understood right, there is no development component here, so we'll not have any EPC revenues from this, right? So we'll straight away be just operating the mine.
इसमें जो डेवलपमेंट हमें करना है इसमें ऑलरेडी वहाँ पे जो पुराना माइन ऑपरेटर था एमटा ने जो उसको छोड़ा हुआ था उसके कुछ लोगों को रिहेबिलिटेशन करना है. रिहेबिलिटेशन कॉलोनी वगैरह बनानी है जिसके लिए हमें करीब 9 मंथ का टाइम दिया है और ऑलरेडी इसमें कोल एक्सपोज है. तो हम जैसे ही पहले दिन से जब इसमें मोबिलाइज होंगे तो विल स्टार्ट द कोल ओवरबर्डन रिमूवल करेंगे और सीधा कोल गवर्नमेंट को देना चालू कर देंगे.
ठीक है. So that means there is not going to be any EPC component, right?
That's coal is a EPC कॉन्ट्रैक्ट. जो हमारी SPV है उसमें DBL जो काम करेगी कोयला निकालने का काम जो ओवरबर्डन निकालने का काम अभी हम लोग जो जैसे ओवरबर्डन रिमूवल का काम NCL के लिए कर रहे हैं उसी तरह हम उस SPV के लिए कोल ओवरबर्डन रिमूवल करेंगे और कोल निकालेंगे. तो दिस इज प्योरली EPC वर्क फॉर द DBL.
Understood. So what will be the cost of production per ton?
840 crore is our bidding cost. That includes our करीब अराउंड 200 करोड़ हमारा जो इसमें इक्विटी लगेगा उसकी फाइनेंसिंग कॉस्ट इंक्लूड है और दैट्स द बाकी रेस्ट ऑफ द माइनिंग फी.
Understood. And what is the realization we are expecting per ton there?
That is our fully financial model. अगर आप उसको नेट नंबर्स में देखेंगे तो दैट्स और जैसा ऑलरेडी रोहन ने बताया था कि 18-20% एबिटा वाला बिजनेस है हमारा ये और हमारी प्रॉफिटेबिलिटी इसमें रोड लाइन से बेटर और उसके लाइन में रहेगी लगभग.
Understood. So about 12% EBITDA margin.
नहीं सर, this is आप सर आप उसको इतना मत जाओ. Basically समझ लीजिए profit will be in line with how it has been in road and elsewhere. उसके हिसाब से profit in line रहेगा. वो per ton उस पे ना जाए rather than just.
That's so many components. उसमें actually per ton में आप confuse हो जाएंगे. उसमें एक coal overburden होता है. Overburden removal के बाद कोयला निकालना है और 55 किलोमीटर दूर जाके एक रेलवे साइडिंग होता है. वहां तक हमें इसको ट्रांसपोर्ट भी करना है. तो अभी कॉल पे एक्चुअली आपको पूरा मॉडल समझाना थोड़ा मुश्किल होगा. अगर आपको कभी भी इस मॉडल को अच्छे से समझना है तो यू कैन कॉल मी एनी टाइम. तो आई विल एक्सप्लेन यू द फुल मॉडल ऑफ दिस प्रोजेक्ट.
Sure, sir. We'll take it off. Yeah, that's it from my side and all the best, sir.
Thank you.
Thank you. We have the follow-up question from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Sure, sir. Just on the competitive intensity, now if I were to be talking about your peers in terms of their backlog to, let's say, their revenue trend at this point of time, they are almost full for more than 3 years now. Whereas for you, if I just analyze first quarter number, you're still at 2.5 in terms of backlog to annualized sales for the first quarter. Do you see this playing a role in you increasing your market share in road ordering over time?
Absolutely, sir. इसमें सर very interesting statistic is that कि अगर आप order book to revenue ratio देखेंगे for the last few years, we have maintained it consistently. That means we have kept on executing projects. We have kept on giving revenues and profits. While for most of our peer sets, it's only kept on increasing because the revenue is not caught up. Now, when you are saying ki how our share will look right now, we are not in the market for ki we want to gain a larger market share of any in the road space. I think we are only trying to do as much as is needed for our own internal growth, as much as we are targeting where we feel is a sustainable growth rate, and that's how we are thinking, not as if attaining a total market share. So we are not in that race. So even this year, the guidance that we have given you is in line with how we think about reducing our debt overall, how we think about improving our working capital cycle overall, how we think about getting profitable margins. That's where we're looking at. And if there is less competition, it is better for us, given that most of the peer sets will have a full order book. It is obviously a better situation for people who are executing more.
Sure, sir. Just again, a data point required. Has the number of acceptances changed meaningfully for you over the past 1 year? If so, if you can just share that number. Because I consider acceptance as good as debt, so just wanted to see the gross debt number on an added up basis.
No, it's not changed meaningfully. I'm not sure I follow that, but I am not even sure acceptances ka hai. But if you want to have that offline, we can talk about it. But there's nothing that has changed meaningfully from how it was. It's business as usual as what we were doing earlier as well, which is eventually reflected in our, our interest costs and all that. So all those things, it's similar in fact.
Got that. Thanks. Those were my questions.
Thank you, sir.
Thank you. The next question is on the line of Pranchal Jain from Access Capital. Please go ahead.
Thank you for taking my question. So firstly, congrats on great set of numbers. My question relates to the balance sheet item. We've seen some reduction in current liabilities. Is it mainly because of we've seen some decline in advances or any other reason? If you could highlight that.
Yeah, actually we have regrouped our balance sheet figures. We have adjusted the credit of GST which is available against our liability, GST liability.
Okay, fine, sir. And so secondly, like what Rohan had guided, EBITDA margins of 17 to 18% for next year. So just to clarify, does this include 100 bits of early completion bonus also, or would that be over and above that?
No, this includes all the things. The completeness, including early completion.
Fine, sir. Thank you. That's it from my side.
Thank you, ma'am.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference back to Mr. Bhavin Vitlani for closing comments. Thank you, and over to you, sir.
Thank you, Aman. On behalf of Axis Capital, I would like to thank the management of Dilip Buildcon for giving us the opportunity to host the call. Before we end the call, I would like to hand over the call to Rohan and Devendra ji for closing comments. Over to you, Rohan, please.
Thank you, Bhavin ji. And thank you everyone who participated today in the call and has been part of the company's journey. And we hope to see you for the next conference call. And if in case there are any suggestions for the company and anything else that you feel we can improve ourselves with in terms of how we are presenting data, we look forward to hearing from you. Thank you again for taking time out and on behalf of the whole DBL team, thank all of you guys.